How you doing, everybody? Welcome, welcome. Welcome, welcome, everyone. How we doing? Happy New Year. I wasn't talking until just a second ago. Can you not hear me? Nah, man, I'm an old guy. I don't do resolutions. Yep. Just got to keep doing what you want to do. Thanks, Sonny. You too. Thanks for always being here. Appreciate it. Husky, how you doing? Ramsey, bird calls. Welcome, everybody. We'll just give it a few more minutes here. Just looking at a couple of different charts real quick. No, not really. You know, it's not really much to say about dividends. If you have a question, you can always ask those in the Q&As. I'm happy to talk divvies with people. Um, but I only talk about real dividend stuff, not this like the nonsense like Tesla ones and stuff, all of that stuff. Like I don't go looking for those like 70% dividends that the stock's going to lose so much value that you're going to lose money in the long run. Just buy good dividend stocks, the long-term names that have been around forever. And if you want, and it all depends on the size of your port. Like what people need to remember is that dividends are not going to pay you a large amount of money. The key to a dividend is a relatively large position in whatever the stock is, so that the dividend can like offset some losses on some of the shares, sort of deal. So that's what you really want to look for in dividends. But it's they can be a really great place to park some money. We're actually going to talk about not necessarily dividends, like we aren't really going to talk about them for dividend reasons tonight, but we are going to talk about some of those some of the value stocks that just have been kind of ignored. I mean, one that we're going to talk about tonight, Coca-Cola. Interesting to know. I mean, big move on it today. Rare sized move for Coca-Cola today. But we're going to talk about Coca-Cola because interesting note on Coca-Cola was it ended the year. I mean, it had a super choppy year, but ended up even with the big bounce after the end of that aspartame news, ended the year red last year, which is, pretty unique in a year where most things really, really paid. I won't say most things, but a lot of things really, really paid. So, just look for those safer dividends, more reliable dividends, add to them and don't look back, sort of deal. Real estate holdings. Yeah, I'm a pretty firm believer. Buy real estate all day, any day that you can. Who cares about rates? Who cares about any of that stuff? If you got the money to do it, you should probably buy some real estate. Okay, give me just a second and we will get rolling. Okay, welcome everybody. Thanks for coming. I'm Dirty River. Happy to have you here. Tonight we're going to be, lecture is probably not the right discussion for or description for what we're going to be having tonight. I want to think of it as a discussion. I want to talk to all of you. Got a nice amount of people in here, and so talk to all of you and hear some of your opinions, things that you're looking for in the market. Any questions you might have. We have an interesting year ahead of us, depending on the Fed and all of that stuff. So it will be, hopefully, hopefully we get a nice another year packed with volatility and big moves, and we'll see what happens. No guarantees. Last year was a blessing. 2022 was a blessing. Great years to trade the market. They are very, very rarely that volatile. So it was nice to be able to take advantage of some of that volatility for all of us. Whether you came out on top or on bottom last year, doesn't matter. I'm sure you learned a lot. And if you've been trading for a couple of years, you were able to weather, 2022, you were able to weather 2023. Well, now you've seen some of the stuff the market can do. So hopefully that will have you pretty well prepared for our year ahead. As I said, there's no telling what the market is going to do. Does the market want to keep ripping? Is the market going to dump? Are we going to get some, sort of, big pullback? One thing that I always try to teach people about the market is that It's forward looking, and we've seen that all year long, with speculative bets on the upside or whatever it may be. We've seen the market looking for upside basically all year long. We have had some substantial pullbacks. If we just look at basically from the bottom, October 2022, we've had plenty of nice, very substantial pullbacks, almost 10%, almost 10%. This one was, a full 10% plus some pullback. And so the market has not, of course it has been up all year. There's no denying that big year out of the S&P 25% or whatever it was. No denying that, but this hasn't been, a Fed pumped market as we saw, technically speaking, going back to about, 2009, really. But if you really want to start looking at just a Fed fueled market, you want to go back to around that 2016 area. That's when, and we can see steady grind up, before then. But in 2016, we can just see the Fed fueling the market. Hedge funds having unlimited money, being able to borrow money at literally a 0% rate. We can see in 2018, this is what's known as the 2018 financial crisis. That was when the Fed actually, hindsight being 2020, wish they would have stuck to their guns, attempted to increase rates for really the first time in any substantial amount since 2008, 2009, when Obama, implemented QE to pull us out of that 2008 housing crisis. So the 2018 financial crisis, obviously, as most things on charts do, as most pullbacks always do, ends up looking like a blip on the chart. At the time, it was a 20% pullback on the market in about 2.5 months, 3 months. It was a big move down when you think about it. And so there was, we had unlimited money in the market, fueling the market. This is like the 2020 on up pump was like the crazy, or COVID pump on up is crazy. When you look at it from 2016, we started at 224. By the end, we were all the way up here to, at the end of COVID, 340. And then, 4 years later, we're up well over 100% on the market. Well, if we look at this COVID pullback, it actually pulled us down all the way to 217. And in the matter of a year and a half, it ran over 100%. So from basically 2016 to the end of 2020, we saw the S&P do 100% twice, which is insane, And so this is a Fed fueled market. This is the Fed removing their money, and this is people making tentative bets looking forward on the market. And so that's what we saw. Fed has been reducing the balance sheet. They've been fighting inflation. They've been, increasing rates. And so that's what we saw in the market. And then when we look at this year, we saw buying, people wanting to buy, people being optimistic for the future. On certain names, Nvidia, obviously a big standout, we saw insane amounts of buying. And so we have a forward-looking market going for us right now, into what is, in my opinion, going to be a very, very interesting year. It's going to be another year of, waiting to see what the Fed does. At one point they were pricing in 6 cuts, then they were pricing in 3 cuts. Now they're back to pricing in like 5 cuts. So we'll see what the Fed ends up doing. I haven't had the best luck trying to follow those CME charts where they price in, what the Fed is doing. It tends to shift a lot. But we want to see what the Fed will do as far as rate cuts. And so, that's super technical, extreme, economics, that you don't have to be super obsessed with it to trade the market. If it's something you're into, of course, always feel free to go and study, what do rates do to the market? What do rates do to, banks, banks' profit margins? What does it do to small caps? What does it do to all of these different things? And so that is what I kind of want to talk about first. Going into 2024, what is things that we can look forward to, trades that we should look into, all of those things. And the first ones that I think, in my opinion, basically everybody should be looking at is small caps. And as much as I don't I don't like trading small caps. I don't like trading the small market cap, low float kind of things. They can be really fun. You can get some super explosive moves. However, I will likely be trading all small cap movement by way of IWM. IWM is just, it is the ETF that tracks the Russell 2000. A good question. I should, not think about that. Oh yeah, James, I was going to talk about that, but I decided to not even touch that. That was like, not only does big money have unlimited free money at no interest, they're also getting taxed basically nothing. So, market was pumped, So good question. What is a small cap? When we say a small cap, what we mean by that is something with a small market cap. And so I don't actually know what the number, I off the top of my head, and I'm sure there is an official number of what constitutes something being a small cap. But it's based on the market cap of a company, and so you might have something like Apple that is $3 trillion or whatever it is. Maybe might have given that up now, we'll see. But Apple that is 3 trillion as a market cap. Or you can look at, some of those smaller companies that have that smaller market cap that we're looking for. One, like, I hate it. I think it's a terrible company. But something that, you might want to have your eye on for like smaller market cap is maybe going to be something like Lucid. I think it's a terrible company. I don't really like it. Chart looks horrendous. Market cap's only $9 billion. It's trading at $4. Seems to be putting in a base down there around 4, starting to offer a nice risk reward trade to play catch up on a small cap, a couple small caps that people might know, because shout out Norvin if he's in here. SMCI, shockingly enough, is actually listed. I don't know what its market cap is. I'll Google it real quick for us. I don't know what its market cap is. $15 billion. One of the largest holdings in IWM. Oddly enough, another one. Let's just shout out Norvin's trades. RMBS. This is another one on a run in that AI chip field. I looked up its market cap. I think it was 9 billion, something like that, but a smaller market cap stock. And so what a smaller market cap means is that when they get to running, they can really, really run, because it means people are starting to see interest in it. And so I like to trade them by way of IWM, which is the ETF that tracks I don't know its top 10 holdings. I can look them up real quick, but it's going to be a bunch of companies we don't know. 1 second. Oh, SMCI, number 1. Wow, the next one, shockingly enough, MicroStrategy. That's the big old Bitcoin one. Michael Saylor. I wasn't aware that that was considered a small cap. Setting up for a move too, like most stuff is. Yeah, and then basically, I know none of these we got Duolingo on there, but that's why I trade them by way of IWM. I want exposure to small caps without having to be invested in individual names, small caps, because they can go wildly against you in a hurry. IWM is, it might go $1 or $2 or whatever against you, but you can stop out safely. Some of the small caps, when they get to dumping, here's a nice one. NIO today. NIO is by all means a small cap. It put out delivery numbers today. Let's get these B bands out of here because they're pretty ugly, huh? And NIO was down 5% today on basically nothing, and so small caps can move. When a breakout comes, the breakout can pay very, very well. And so why look at small caps if they're so, out of control and they're harder to trade and all of that stuff? The main reason, in my opinion, that we want to look at small caps is due to the rate trade. And what I mean by that is when you are trying to trade, the laggards in the market, we want to look at something like IWM, because these small cap companies that we're talking about, most of them are not profitable. Most of them have, I won't say questionable business models, but they have business models that need a lot of work to become a profitable company, And so how they benefit from decreasing rates, or what we're seeing in the market, this is to see a $20 move on IWM in the matter of like a couple of weeks is unheard of. But it happened due to speculation in the market that these rates are going to come down. And so when I'm a small company that I have an okay idea, I don't have a perfect business model, I'm not selling a ton of, inventory yet or selling whatever I sell yet, I go take on debt because I believe in my own company. And so I'm going to go to the banks and I'm going to say, can I get a loan for my company? Here's all of our plans, blah, blah, blah. This is why I want a loan. Well, when you have a 6% or 5% or whatever it is Fed fund rate, and you're paying 5% on your money, all of those small cap companies are really going to get beat up because they can't afford that. They can't afford that type of interest payment. We saw it all last year with high inflation, high rates. One that always sticks out, it's of course been on a run now, but Shop. Shop was like the sweetheart of the market. And then it got obliterated because it wasn't profitable. It was relying on, leading into this, they could borrow as much money as they wanted at basically no interest. Well, when all of a sudden these companies that have been making no money and have been functioning, basically on debt, you end up getting an 80% drop or even more, 86% drop in the equity. I guess more from the highs, probably a 90% drop on the equity because they literally can't afford to go borrow money. So they don't. So when we see potential rate cuts, what is, pretty well accepted as a Fed pivot incoming, they have, without saying we're pivoting, they have said we're pivoting, and so small caps are who benefits. So everybody, in my opinion, should have their eyes on small caps. And going forward, we have a very obvious range right here from those highs we set back in 2020, I won't say highs, lows, from the last lower high that we set. We want to look there. So we can see that thus far, the small caps are failing the breakout. However, this is a level that I think basically this is just looking at the weekly chart, big picture only. This 202 area on IWM, if you're into trading small caps and looking to trade that rate trade, this 202 level should be crucial to you on anything IWM because this is going to tell us, for all intents and purposes, what the small caps are going to do. So if you are still bullish on small caps and you're still on that small cap trade, which I think, you're smart to be looking for it. I was saying back here, I'm probably going to miss it. And I totally missed the whole one, the big one, but when we get this breakout, when we get this breakout, I think those small caps will once again really, really be in play. And so for me, I think a lot of eyes should be on the IWM trade. Not only does it trade much more friendly and cheaper than SPY and QQQ, but it still gives a really nice reward. If you're into those shorter expiration things, you of course need to trade it smart because it doesn't make, $4 or $5 moves in a day. So keep the strikes reasonable, but it's a great way to trade a broad sector of the market. And so this is something that I really think everybody should have their eyes on. I see questions. Do small caps move faster? Yes and no. That's kind of what I was talking about with those breakouts. The problem with small caps is they can do absolutely nothing, followed by an explosive breakout or breakdown. So there's something that you kind of need to just watch. And your next question, is IWM sort of like SPY for S&P, but for small caps? Exactly. It is 100%. That's what it is. It tracks small caps, just like SPY tracks the 500 biggest companies based on market cap in the US. Is SPY waiting for FOMC minutes? I don't think, 9 times out of 10, SPY does not care about the FOMC minutes. We might see like a little, dollar candle or 75-cent candle. But on those rare occasions, those 1 out of 10 times, 2 out of 10 times, we can get a really explosive move. But what you need to look for, and again, this goes into only if you care, the other option is don't trade around it. But you can wait for the FOMC minutes to be released. And what will, for anybody who doesn't know, I guess this is a good lecture to talk about it. What the minutes report is literally the written transcript from the last meeting that occurred last month. So it is theoretically everything we already know. However, when it makes us move is when they make an amendment in there. And so every once in a while, like that's what happened. We had an FOMC minutes, I don't know, it was probably 4 or 6 months ago, that just dumped us, as I recall, like, $4 down day on SPY after the minutes. And it was because we had a dovish pal talking. And then when the minutes came out, we had got some of those first, like when inflation started to tick back up, we got some of that tick back up. So when the minutes came back out, all of a sudden the tone had changed and they had made some amendments. And that was when, we probably started seeing selling. Maybe that was, August, September, something like that. And so minutes report, maybe it does something, maybe it doesn't. I think the non-farm payroll, ISM data, I think those are the kinds of things that will likely give us a bigger move. But so that's kind of talking IWM, talking small caps. Does anybody have any questions about it? Anything you want to know about trading them? Any small caps you got your eye on that maybe we should check out? And if not, we're just going to tonight we're just going to kind of go through the ETFs. And like I said, I want this to be a discussion more than a lecture. I can give you my opinions. I can tell you what I am watching. But it's fine to disagree with me. I'm wrong plenty. Everybody is wrong sometimes. That's a big, part of trading, in my opinion. So before we move on, I just want to make sure no questions, small caps, IWM, any of that. Everybody feels good about that. Kind of knows the areas to watch to either maybe be short if we lose this 198, get long above 202. Makes sense to everybody? Yes, love it. Okay, next thing we're going to talk about, this will be a quick talk. This is DIA. The diamonds is what most people call it. And so this is the ETF that tracks the Dow Jones, which, there's a lot of people that say, hey, the Dow Jones or the stock market does not reflect the economy, which basically speaking is true. However, the Dow Jones, the things that it holds, it does a very good job at showing us, how things are, it gives us a very broad view of how things are going in the market. And because of the things that it holds, it kind of gives us an idea of, how the economy is doing. Again, the stock market is not the economy, it is forward looking. So it really tells us more how how might the economy be doing in a year from now, kind of thing. It will see optimism or it will see bad things, typically before they come. The Dow was one of the first things to start rolling over going into 2022. And, the Dow was one of it put in a bottom and never looked back. And now it is the only, it was the first major ETF to blow out all-time highs. It is the only ETF to close at all-time highs, and it is the only ETF to continue setting all-time highs going into the new year. So it's a really, really great place to watch. A lot of the old-time traders, they trade the diamonds. It's what a lot of people have made their money on because it's been around forever. It's something that you can trade in many different forms, whether you're trading, whether you're just trading DIA or maybe you're trading the futures on it, the YM futures, bunch of different ways to trade the diamonds. And then again, I'm not going to remember off the top of my head all of the major holdings of the diamonds, but they hold everything. They got a good chunk of Microsoft in there. They got like McDonald's, Caterpillar. They have all sectors, as SPY does as well, but SPY has the biggest names in those sectors. The Dow just kind of holds a little bit of everything. I mean, it's got Boeing in there. It has, it's covering travel, it's covering tech, it's covering healthcare. I'm sure that UNH is likely one of the largest holdings in there. It's got to be top 3, no doubt. And then one of the big things that it holds is banks. It has, and again, I'm not I'm making up some of these numbers as we go. So if anybody wants to check me, I won't be offended if you double check me. But as I recall, the diamonds hold around 20 to 25% of their holdings are actually financials. So that's going to be things, Goldman Sachs, JP Morgan, it's going to be those kinds of things that it holds. And when we look at the market, XLF is the financial sector of SPY. It's put on an amazing run. Don't get me wrong. It's up 20% or whatever off these lows. It's still somewhat of a laggard. We had like potential banking collapse and stuff this year. We're finally getting this breakout over 37. This has been that big level to watch when whole market turned around and then banking situation happened. So here we are here we are on financials, finally attempting this breakout over, you could be specific at 37.10, but I would more just think of it as this breakout over 37. Now, because the Dow holds a large amount of financials, we want to keep watching it because it's had a nice push from all of those big names. Like I said, Home Depot, I'm sure Goldman's up, UNH is up, all of these names are up in it. We still need that final push from financials to really keep moving the Dow up. It is nowhere where I am bearish at all. In fact, if anywhere in the market, if I'm looking at the Dow and I'm trading Dow stocks, I'm buying any pullback to 370. And that's a $7 drop. That's contrary to this move, $7 drop is a pretty good pullback on the Dow, but I will be looking to buy any pullbacks to this previous all-time high. I think it's a great thing to trade. A lot of people forget that the names, a lot of the names that are in there. I should probably look up the top 10 holdings just so we can go through them. Okay, top 10 holdings. We got United Health making up 10% of it. Obviously been a big mover in recent times. This thing put in a $110 move off of these lows. And then today, value stocks, Dow stocks, we're putting in some moves. Next biggest holding, Microsoft, coming in at a whopping 7%. No questions asked. This has helped the Dow move tremendously this year. Goldman Sachs, number 3. Obviously putting in a very, very big move. And so, great, like these big names are moving for the Dow. It is why the Dow is setting all-time highs. McDonald's, huge run off of the health news. This thing is up just wild, 20% run on McDonald's off of the lows. Amgen, that's another one. Nobody trades it. Pretty illiquid option chain. Big moves on all these Dow stocks today. And, I'm just trying to point these out to you. Visa, another one, 5% of it. Oops, sorry, it's just V. 5% of it, huge move on Visa. Gotta be bullish on Visa above this 257.70 area. Really all the way down to 257 about, give or take. Hard to be bearish on this thing for me. Potential continuation incoming as being one of those big name Dow stocks. Oddly enough, Salesforce, that's a big one in there. Had real rough go today, one of those Dow names that didn't perform, but big gap on that earnings last time. As I said, CAT, this is something that even Tilio and I hinted at. God, that was probably a couple of weeks ago. We have, I bet this was the day, we have pivot talk. When you have pivot talk, you start to look for some of those, utility type of things, those working type of things. The one that, Tilio was talking CAT, I was talking John Deere. Oh yeah, look, this was it. This was the breakout of FOMC day. This was where we talked to John Deere. And then obviously we're up almost, $25 off of those, off of that move. So another great thing to watch. And then final one that we're going to touch on in the Dow as well, Boeing. Run of a lifetime, and then of course just starts getting bad news, typical Boeing type of moves. It's a bad news magnet. So we'll see if this big sell wants to hold for us. I'd still likely be looking to buy pullbacks down to about 250 with a stop under there. Could get pretty flushy under 250, but that is the Dow, the diamonds. one of the strongest things, one of the strongest places in the market. If you're thinking about shorting something, maybe check and see if it's in the Dow and maybe reconsider shorting it, in my opinion. So that's the Dow. Everybody good on the Dow? I know most of us don't trade a lot of those names, but they're, well, other than probably Microsoft, but some great things to keep your eyes on as well. Oh, how we doing? Morning, evening. Okay, great. So next one, something you all care about. QQQ, obviously, set the new all-time high. Basically hated it the whole time. The second we broke it, volume died on it. And so when you have a breakout that is suddenly not being held, very well, on volume, it's something you always need to consider. And then, I think we even talked it. I wonder when our last class was that I talked this. We've been looking for a pullback in tech to come. However, this big old gap down was aggressive. In my opinion, this was on the back of that Apple news. We had some guy at Barclays reduce his profit target from 161 to 160 on Apple. So he brought it down $1. It's currently trading $25 above that. So I think we just had a bit of an overreaction on the market. We'll have to see how it all plays out. However, I think that when we are trading in this area, the main thing we need to look for, and this is on the weekly chart, and so this was back when we set the top back there, end of 2021 going into 2022. This area right here, and I know it's big, $20 zone on here. There is a ridiculous amount of support in here. When we zoom in on closer time, I think that we really only have a couple levels we need to care about on QQQ. The top of this range, as well as 400. That's obviously big whole round number, very always going to be super important on any of the major ETFs. Whether it's 400 QQQ or SPY, does not matter, going to be a big level. So when we, really try to take in the big picture on some of these charts, look back here, we can see this whole area was a mess. You can even see it took us a long time to finally build up that strength to push through it and attempt that breakout, the break over all-time high. Well, now we're just right back to the top of the range, right back to that 400. I'm hoping that the 400, we almost got down there 24 cents away. Hoping that wasn't the dip buy that we wanted and I missed it. But when I look at this big picture thing, still to me, buy any dips on QQQ all the way down to 400, tight stops below there. However, when we look at the bigger picture of things, QQQ went on just like the run of a lifetime, like generational run. Let's see, it did approximately 62% from those lows. I believe is what this is telling me. So big run out of QQQ from the lows last October all the way up to the, all-time high. Very big run out of this thing. Likely needs some cool off. In no way, shape, or form am I saying I'm bearish on tech or anything like that. I think you'd have to be just pretty insane to be overall bearish on tech. But there is no denying that they have put in some, all these big names have put in some very big runs. And it's worth, you don't want to be getting long at all-time highs. You want to be getting long on pullbacks off of all-time highs, in my opinion. However, I think going forward into the year, we will likely see below these 400s we will see some pullbacks, in my opinion. There's no reason to think that we won't. Of course, still not overall bearish on tech by any means. We can continue to see if we get that, AI tailwind, all of that stuff. Reducing rates will also help tech companies that also can rely heavily on debt to keep functioning, because most big tech companies take on a lot of debt to do research and development. And so I think, reducing rates will even continue to help a lot of those tech companies. For now, remaining, cautiously bullish. Obviously, we've had a pretty big sell, QQQ down. At one point, it was down $12 in 3 days, something like that. So nice, solid pullback on it. Still looking for dips to buy. Obviously, don't buy the bottom of every single red candle or anything like that. But if we get those tests down near 400, I really do like the risk reward there of getting long. If we do start to see some weakness under that 400, there's plenty of levels that we can go retest. Obviously, some of these breakouts from back in November, even this breakout back here, we would likely have a lot of support somewhere right up in, want to grab all of these from back there. We have a lot of levels below us, but don't be surprised if we start breaking down some of these. This doesn't mean get bearish. This doesn't mean start buying your 340 QQQ puts or anything like that. But, let this 400 level give up before you start getting too bearish on the tech trade. At least, in my opinion, that's what I will be watching for. So that's my stance on tech. Like I said, I expect some pullbacks. I think it will be pullbacks to buy. One thing I did want to talk about, I like to think about the seasonality things of the market. And one of the unique seasonality things that we have going on right now is the January effect, is what it's known as. And so what the January effect is basically is typically volatile moves up and down. With a market that ends up relatively flat. Obviously we didn't have that last January because we had a market moving, but in January we have lots typically, and who knows what this year will bring for us. We have so much data coming, and over the next couple of weeks we'll see. But generally speaking, a January market is going to be volatile moves up and down, but ending relatively flat. So that's kind of what I'll be looking for. Substantial pullbacks to buy, really all the way down to that 390, even down. If we do give up 390, you can start to feel a bit more bearish for that next 10 or so dollar drop. But for me, still we'll be looking to buy pullbacks and play bounces on the tech long before I'm looking at getting longer term short on them. One thing we should of course look at, obviously after today, is Apple. Gigantic move for Apple. I mean, really, it's not at one point Apple was like down, like, I don't know, 4.5% or something like that. That is a pretty wild move on Apple. Gave up some of those daily SMAs today. Gave up over a month of gains, month and a half of gains probably. However, it's Apple. It got some bad news. It's had dramatic reactions to a lot of that bad news. For me, though, this 185, as you can see, when we've broken above it, we've had just explosive buying. Again, 185 explosive buying, explosive selling below it, gapping down to it, followed by explosive selling, finally breaking it, explosive buying. 185, in my opinion, is really, really crucial on the Apple chart. Won't be swinging short on Apple and without some strong daily closes under 185 or anything like that. In fact, bought the dip on it today myself. Something, total lotto, not recommending other people do that. But to me, this seemed like a pretty dramatic overreaction to some, not very important news. And so we'll just have to see what happens on Apple. Still, cautiously bullish, honestly more bullish than I was at 199. I'm much more bullish down here at 185 because we got some upside on Apple again, even if it's just up to these wicks. But eventually this gap will fill to the upside. Can't wait to catch that move. But Apple definitely one to have your eyes on. We'll see how much the 3-day rule comes into play for us. Is it going to just kind of mess around for a couple days, or are we going to get a move in one direction, whether below 185 or crack above this 188 and run? Can't wait to see what happens. Apple definitely one that I'm in the shorter term looking to trade. For anybody that does own Apple shares or anything like that, man. Yeah, we've had a nice little pullback right here. Let's just see from here to here, we're talking what, it's 7%, 8% pullback, something like that. So it's a good idea to grab a couple of Apple shares on an almost 10% pullback. Nobody would scold you for that. So Apple definitely one to have your eyes on. And final thing that we are going to directly talk about is SPY going forward. Obviously, SPY, the major ETF that in fact did not make it up there to those all-time highs, Like I said, my tab went knocking on the door, but did not quite make it. And so I think a lot of people definitely, expecting an all-time high test sooner than later. As we know, this 470 area been absolutely crucial. You don't want to be short SPY down there. I mean, we even saw today as we got close to it. They showed up, and this is, I mean, I was actually talking about this with a friend. This is a during market 10 million volume candle fall, which came instantly after basically a 6 million volume candle. So it's interesting to look at Apple, and I love to analyze volume. And going into the end of the day, going into the end of the day, there was no mistaking what people wanted to do on SPY or Apple. And so we see it here on SPY. Sorry, I think I said this was Apple. We see it here on SPY. 16 million volume going into the end of the day. People wanted to buy this thing. If we go to Apple today, you can see decent volume, not huge volume. Apple was down almost 5% on the day. The selling volume after these end of day candles, I mean, even this one after close on Apple was 10 million. The one before it was 3 million, another 2 million here. I mean, we had 15 million volume on Apple, which was, that's what, 15%, even more, 20% of the daily volume came in these last three candles, and it was solid buyers. We saw a serious shift towards buying on a lot of these things end of day. And so that's what I wanted to really talk about on SPY. And something that I was looking at earlier, we had a big sell, no denying, I mean, like this gap down for, we were at one point, we were down, from the highs on Friday, we were down almost $7 on SPY, very, very big sell. But something that I was taking note of, something that we had kind of talked in class the last couple of weeks, as we were approaching these all-time highs, we were having relatively lackluster volume, a lot of these 50, and obviously it was Christmas and, leading into holidays, we were having lackluster volume. Well, these last 2 days, volume picked it up. I mean, 120, 100 and whatever, 24 million volume on SPY is by all means a high volume day. If we zoom out and look, and I actually put this line down here, you can see there's times, COVID, that kind of stuff. There's times where we do spend, a few days over 125 or 125 million volume. But as you can see, I'm making this up, 90% of days are less volume than that. So we are starting to see where some market participants want to participate. And so that's what I'm looking to see is, even on Apple, nice uptick in volume today, obviously, after decreasing for this whole sell-off. Finally get a big sell-off on news. Let's see where this volume takes us going into tomorrow. You have a gap down like this, and you have a day where the seller volume didn't even double the buyer volume by the end of the day. That to me is something to take note of. Another one that me and Toasty kind of got our eyes on, we got Google breaking out, attempted to fail this trend, did not fail this trend on slightly increasing volume. Google, another one, we gapped down $1.50, $2 on it, then sold heavy, and we ended the day with more buyers than sellers. I think that is something to always take note of on these things. And so that's what I've kind of done. That's something I like to do the end of day. Tesla, another one, Tesla opened relatively flat off of those numbers, I mean, we were up maybe a buck or something, and then buyers showed up. So we have, a red candle that buyers won on. Some people might call it a hammer, who knows what you want to call it. Red candle, red day, basically across the market. We had Tesla ending up basically flat. It was down 6 cents, technically speaking, on a day where buyers won the day. So we saw today some of these levels where some of the big money, some of those institutions wanted to get involved. Amazon one that didn't quite get the recovery others did. and sellers held on. They ended up really selling us for that whole day. And even with very big buying volume, I believe the market on close volume was like 7 billion to the buy side. Even with that really big buying, they still ended up, down 1.3%. Many more sellers than buyers. Amazon not one that they dove in on the dip buy. And so I think it is worth it to really watch some of those big names in SPY and SPY itself going into tomorrow to see, do the buyers want to show up? As I said, my opinion, and of course we've moved away from it now up to almost 473. You don't want to be short SPY at 470. I mean, that's just crazy. You're just asking for it. And then even below there, we could go visit some of these wicks, of course, 468's down to here, whatever it is, 467.50, something like that, which, that's a nice $250 drop. I'm substantially more interested in the, $9 or I guess $7 pop to all-time highs. Like that, that is why to me down here, the risk and reward, the side is, lean into that long side down here if you can. If you didn't catch it at the end of the day, that's fine. Like you don't have to catch these kind of moves. Nobody knew, like, trade for it, like, and understand. And I won't even, I don't even like hold it against them, but like trade for it was full on screaming, and it's like I won't deny that it is kind of one screaming bear flag into the end of day with explosive buying out of it. I mean, that was like classic market move to say, hey, actually we do want to buy this. And then even, we closed above opening price. We're red on the day because of the gap down, but we closed above the open. So something to keep your eyes on going into tomorrow. I always like to encourage people to look at the big picture. Don't get bearish. We had it a week and a half ago. I was begging people to not be bearish after one red day. And God, we ripped $10 off of there, So, today's kind of another one of those days. I'm not saying don't have, some bullish plays in or some bearish plays in your mind. However, for now, tread lightly, until we give up 470 with some strength. Big picture on SPY, same sort of deal. Same as QQQ, same as everything. Of course, we haven't tested all-time highs. Most people expect an all-time high test, at some point today, or not today, sorry, at some point, this year. No reason to think we don't, barring some bad news. However, for me, I just look at, some of these simple weekly levels, big 460 level, that was where we took this rejection earlier. Buy dips, continue to buy dips through, down to here. Maybe if we're giving up this area where we don't have a ton of levels, 460, 467 down to 460, 450, of course, short it, take advantage of downside in the market. However, still be looking to buy dips and still until we give up some of these more major levels, at least in my opinion. That's how I'll be looking at the market. However, it's the same as tech. It's the same as everything else. Don't be surprised in pullbacks, even potentially deeper pullbacks in the market. I'm not saying that we are going to absolutely plummet. We're going to go visit these, whatever they were, October lows, something like that. Oh yeah, I remember that. Some October lows. Like, I'm not saying look for 410 on SPY. That's just ridiculous and wrong in my opinion. But look for some constructive pullbacks to some of these like big levels in the market and look to buy dips there. As I said, don't buy calls on every red candle of the day, but look for some of these high probability places where you can say, I'm going to buy SPY calls at 460 and I'll stop if we give out, some of these lows from back in 2021, or even, maybe all the way down here or all the way down to some of these like, previous highs that we had. Maybe I'll leave that, 250 wide stop. But look to buy those dips at constructive places if you can. Like today, I feel we were offered a very nice dip buy today down to that 470. If you got in at 470, you're or close. I know we didn't quite get there, but you're already printing. So you don't have to worry about your stop out. But if we get another pullback to this 470 area, you can kind of say, oh, maybe I'll stop on some calls under 468.80 or even, a touch below it. You don't ever want to stop right at the level. Or have the wide stop to see if we really want to give up some of these lower levels. You can, of course, play puts against your longs, no problems there. But pullbacks to 470 are for buying, not for shorting, in my opinion. Can we go over Tesla and Nvidia? Yeah, why not? In just a second. Apple 165 sounds good. Yeah, you wish, Rev. That would be insane. Josh, I won't say I'm looking for a move up tomorrow, but I won't be surprised at a nice move. However, we have data all week long. So, and I'll pull it up just so I can, not be wrong about the dates, the things that I say. So tomorrow morning we got a Fed. Then we have jobs. Then we have jobs and job openings, and we want to see, are those going up or down or what is it? And then we got ISM, which is the manufacturing data. See, the optimism of the people on the manufacturing end of the market. Thursday we have jobless claims, and then we have PMI, which is that's the services part. It's been one of kind of the stickier parts of inflation. So we'll see what that services PMI gives us. And then Friday morning, we have the employment rate, the unemployment rate, ISM, and that's all the non-farm payroll stuff. So that, and rounding out the day with a Fed speaker. So we have data all week long. So don't get stuck in a bias of short or long or anything like that. Just trade what the market gives you, and maybe be, cautious when it comes to swings. Can we do IWM? Well, we started with IWM. Yeah, crude. I know you're like the only person on the planet. It's like, could crude go up, please? And it's like, no, not until we buy crude for the reserves, But yeah, look at that. I mean, let's get us back down here. Let's get crude back down to 66, man. Gas prices going down. Love it. Let's go set some lows on crude. I mean, there's no reason to look for any sort of pop on oil until they say the oil reserves are full, in my opinion. So to me, easy to be bearish on oil. I know companies like, we had XOM put in like a nice big move today. Well, people were piling in short on the flow on XOM flow. Saying, this pop in oil is pops in oil companies are not being backed up by the oil price. What's my thought on analyst targets? They're useless, but they do move the market. My favorite one was so right here you can see it. So between these two nights, we entered AT&T calls right here. Over that night, an analyst dropped they moved it from a buy to a sell, and they dropped their price target from, like, I don't even remember what it was, 14 down to 12 or something like that. And then AT&T is up 26% since they reduced their price target. So yeah, we had one really red day, and then we had nice green day the next day. But I put little to no weight in them. I mean, Apple's the prime example. Like, you look at the Apple chart, and the guy said he's moving his price target from 161 to 160. That is what the price target change was. Apple is still trading $25 above that. So it doesn't, I really don't care about them. Okay, and we were then, we wanted Tesla and Nvidia. So Tesla, I think we already kind of talked. Tesla, we talked a little bit. Big buying volume, potential hammer candle, strong support around the 245, 246 area. Would love to see a push back up towards this trend if we could get it. Tesla's like the most crowded trade on the market. Everybody wanted to be long all through here. By the time everybody got off of it, it finally got the pop, and now it's chopped in a $5 range. Well, I mean, it had one attempted break, but now it's chopped in a range ever since. So this is a trade everybody's waiting for, but I won't be surprised to see a little pop on Tesla. They put out, good delivery numbers. They actually beat the analysts, like yearly analyst estimates. They beat them. And so that's good numbers. There's reason like that. That's like, everybody knows I hate Tesla, but there's reasons technically and fundamentally to be wrong on Tesla, and see if we can get that breakout sooner than later. But again, I would only be looking for a move up to maybe this 255 trend at most, until we get there. Then you can play the breakout. Otherwise, try to short it off that trend because it's been unbeatable. Because there's an interesting thing, I talk about this on Tesla all the time. Tesla still hasn't broken out. Tesla is the only mega name that still hasn't broken out. And then another really, really interesting fact is, so if we look right here, August 22nd, for anybody who doesn't know what that was, this is Tesla split day. Anybody who bought shares for that, leading into that Tesla split is still deep red on them. So I do think that this is, this 300, this 290 area is going to be a likely place for us to track to sooner than later. However, you will likely want to be getting out, because the people who bought Tesla going into the split, well, unless they bought it back here, but shortly before the split, got obliterated if they bought it any time in the month before. Like at one point, their position was down 66%. So they were torched. So they will be happy to take their out when that comes. But in the shorter time frame, I would expect, a nice push up to this trend. You don't want to be short 245, 246. I mean, all the way up to where we were today, 248 area. You don't want to be short on any of that until we give up those levels and try to catch those bigger Tesla moves down. Nvidia, big sell on that thing, huh? Let's look at the 4 hour. I mean, to be honest, even ignoring the funny name of the level, this 480 has been really, really crucial on Nvidia. I mean, it's where we get moves or support. I mean, below 480, you can kind of be looking to, scalp some shorts on Nvidia, in my opinion. But if we break over that 480, hold over that 480, I mean, we did today, 481, we're barely over it. Look for some of those pushes back up. I mean, Nvidia has had no luck with 500 so far. So you're insane if you're trying to buy calls anywhere up here 495 to 500. Don't buy calls on Nvidia there until we get some confirmation over it. However, if we get up to that 500, shorts have worked every single time very well. Yeah, crude going down, crude going down is deflationary, but, and I know, I'm pretty like I'm anti this word, but you're talking about you're talking about the most manipulated market on the planet. I am very opposed to the mindset of manipulation in the market, but there's two things that without a doubt are manipulated, and that is oil and that is silver. Those are the two most heavily manipulated commodities on the planet. So, I mean, yeah, it can be deflationary, but it's not, it's not it's not going to be like the weird backwardation we got where oil went like negative or anything like that. I mean, you need insane things for something like that to happen in the market. But for now, I mean, sure, it can be deflationary, but it can also do anything. I mean, it's oil. Like whoever's clicking the buy and the sell button in those commodities traders are the ones setting the price. So it can do whatever it wants. Yeah, Josh, exactly. I mean, Tesla is the only one I mean, Tesla is in a downtrend. And like, don't get me wrong, Tesla is up 150% approximately since the lows of since an aggressive sell-off. So there's no denying it went on just an epic run this year, but it's in a downtrend and it can't break the downtrend. And it has tried, 1, 2, 3, 4, 5. I mean, on the weekly, it's tried 5 times, probably even many, many more if we look at the longer time, the daily. I mean, we basically got 1, 2, 3, 4, 5, 6, 7. I mean, we got 7 attempts over that thing, all met with failures. I mean, one will eventually stick, but for now, Tesla's in a downtrend. And anybody who bought shares for the split is underwater. I mean, because these are weekly candles. So we had 5 weeks where if you bought shares, you're underwater on. And you have been. And at one point you were really underwater on. So the 300 is the likely target whenever we break it. But for now, don't get in there too heavy or nothing. Yeah, Elon's a total con man. I wonder the same thing, Rev. I mean, I would have to believe that it would absolutely fly, as sad as that is. Yeah, but man, and I like James, you're right. The PE ratio on it is insane. But like what like tech company, like 80 is high. Don't get me wrong, but like tech companies run a higher, you know, like they do run a higher ratio. 80 is way too high. I mean, Apple's got to be around 30 or 40 even. I bet Nvidia's got to be up there too. I mean, it's probably doing better, based on because of how they guide. They're smart, but I would believe that Nvidia is still up there at like 60 or 50 or something like that. So I wouldn't like argue it. But the PE ratio stuff has got really blown out of whack in recent years, just because, I mean, what some of these tech companies have done is really just like it's kind of ruined all of that. Yeah, I wonder what AMD's is. It's got to be just appalling because they are not good. Let's look it up. AMD PE ratio is 1,152. So I mean, and that's insane. It's insanity. I'm not shorting this. I'll tell you that much. Like to me, like AMD is still looking like a dip buy. Let's get AMD down to here. Oh god, if AMD comes to 135, I'm hammering that thing. Stops at 132.75 probably. But if AMD comes down to that 135, 135.70 area, I'm hammering that thing long. But yeah, the PE ratio stuff has got just absolutely insane. I mean, I remember at one point Shops was something insane. Shops was like 2000 or something like that, 2500. It was one of the highest PE ratios around. But I'm sure that has come down dramatically with how they're guiding these days. Yeah, exactly. That was my opinion on Shop. Like it was great, but uh I mean, Amazon will just kill it eventually. I just had a DM about JP Morgan and I wanted to look at it. Wow. That thing is wild since 2008. The thing was the dip buy of a lifetime. Look at that JP Morgan at 14 bucks. Okay, well, see, we're getting a little late, so that's gonna do it. Hope everybody, got to kind of get my spiel on things, like expect some pullbacks, but don't get too overly bearish on the market or anything like that. Um, you know, look for dips to buy on most of those big tech names. Let them, have some substantial pullbacks. We aren't buying every red candle or anything like that. But let's see what 2024 has to offer us. I think that with cutting rates and an optimistic market, and if we can keep wages under control, keep jobs under control, the market is going to continue to be forward looking. And when if you ever want to know what the market's going to do to the right, look to the left. And as one thing SPY has told us is it likes to go up even after bad stuff. SPY likes to run. So let's see what it wants to do. Let's see if we can ever get a red week here on SPY and look for some dips to buy. Yeah, right on. Thank you. Thank you, everybody. Yeah, the Fed might. I mean, I was talking about it. I was talking about it with somebody recently, Rev, that like if things keep going good, economy keeps going good, there's no reason that they won't put some QE back in the state. Yeah, first class of 2024. Thanks everybody for being here, starting it off right. There was like almost 60 of you at one point, so love seeing folks putting in the work. Shanks, AC, Ramsey, thank you. Bird call, yeah. Kelly, Jose, thank you, thank you, thank you, everybody. This was a good one. Hopefully everybody enjoyed it. I had some fun, just talking stocks. I like not really talking about anything specific. So this was fun. Thank you, everybody. Okay, well, if that is going to do it, thank you everybody so much for coming, and we will catch you all tomorrow.